The closing disclosure is a final review of all loan fees and costs, and it must be made available to buyers at least 3 business days before closing. Now, this is a relatively new document that came out of recent banking and mortgage industry reforms. The new closing disclosure replaced 2 longtime forms, the Final Truth in Lending Statement, also known as the TIL, and the HUD-1 Settlement Statement. The closing disclosure will help you compare how costs and fees may have changed since you received your loan estimate during the pre-approval phase. The loan estimate does a good job of approximating loan fees, but it isn't an exact representation of your final costs. That's where the closing disclosure comes into play. The first page of the closing disclosure features the same headings and categories as the first page of the loan estimate. You'll be able to see how your estimated total monthly payment has changed, if at all, from your loan estimate. You'll also see final tallies for your closing costs and the overall amount of cash needed to close. The second page of the closing disclosure provides a full breakdown of all closing costs, including a look at which costs are paid at closing, which costs are paid before closing, which costs are paid by the buyer, and which ones are covered by the seller. The third page of the closing disclosure contains a table comparing your final cash to close calculation to initial figures from your loan estimate. Some of your closing costs and fees aren't allowed to change between when you get your loan estimate and your closing day. But keep in mind, some fees can change, especially things like the initial deposit for your escrow account, your prepaid interest charges, and your homeowner's insurance costs. On the third page, you'll also get a summary of the transaction from both the buyer's and the seller's perspectives, meaning you'll see your total cash needed to close, as well as how much cash the seller stands to gain. The fourth page of the closing disclosure provides additional information about the loan. You'll learn more about whether loan assumptions are permitted, what kind of late payment deadline and fees come with the loan, whether your lender will accept partial mortgage payments, and how much you'll be escrowing for homeowner's insurance and property taxes during the first year of the loan, and more. The fifth page of the closing disclosure shows borrowers how much the loan will cost them over the entire term of the mortgage. You'll see your final annual percentage rate, also known as the APR, which is different from your loan's note rate and reflects the total costs of borrowing. You'll also see the total interest percentage, a figure that shows how much interest you'll pay over the life of the loan as a percentage of the loan amount. It's important to understand that big changes to your loan term or last-minute changes to your contract could result in the need for an updated closing disclosure. Because the document must be disclosed to buyers 3 business days before their closing, the need for an updated disclosure could delay your originally scheduled closing. Talk with your loan officer and your real estate agent if you have any questions about your closing disclosure.